Hello and welcome back to another accounting video. In this one, we're going to look at 3 steps in the accounting cycle from a trial balance, preparing the financial statements. So let's take a look at an exercise. In this exercise, we're given the ledger accounts of Rapid Delivery Service Company with the following balances on July 31st, 2022. You will notice the third account that's listed over here is cash, and they haven't given us this amount, but we can find out this amount and I'll show you how to do it. Also, something you're going to notice over here is these items, the accounts that are listed are not in any particular order, but again, that's okay. We are asked to prepare a trial balance with the account arranged as illustrated in the chapter and fill in the missing amount for cash, and to prepare an income statement, statement of retained earnings, and a classified balance sheet for the month of July 2022. So the first thing that we need to kind of go, when we go with an exercise along these lines, what we need to do is keep in mind that a trial balance, we're trying to find out that the debits are equal to the credits, and it also is a tool to help us prepare our financial statements. So I shall start out by showing you my trial balance, or the skeleton form of the trial balance. So in the trial balance, we will have the name of the company, name of the statement, the date on which it's being prepared. These are balances as of this particular date. Now it's July 31st, 2022. We'll list out the accounts and we'll identify if it has a debit or a credit balance. So the real challenge we have over here, or the first challenge we have, is going through each of these accounts, identifying what type of accounts they are, and therefore what their normal balance should be. So I'll give you an acronym that should help you with this process and make it a little easier. Remember this acronym, DEAD, D-E-A-D. Sounds rather morbid, but it's going to help us over here. So what does this stand for, D-E-A-D? The first D stands for debit. It's telling us what type of accounts have a normal debit balance. All expenses, all assets, and all dividends have normal debit balance. So as long as you can read through these accounts and identify what type of account it is, the rest of it should be easy. So let's start over here. Accounts receivable is an asset. When you see the word receivable, it's an asset. So I'm going to write that out over here. Accounts receivable, the amount is $13,400. Accounts payable, the word payable indicates it's a liability. Therefore, it's going to have a normal credit balance. Remember, DEAD, first one was an asset, therefore it was debit. Accounts payable is going to have a credit balance. Third is cash. Cash is an asset. It must have a debit balance, but I don't know the cash amount. At least I don't know right now. Not to worry, we'll come back to it. Equipment. Equipment is an asset, so I'll place it in the debit side. So let me run through the others real quickly over here. Maintenance and repairs expense. It's already identified as an expense, so it has to be a debit balance. Insurance expense, same thing, it has a debit balance. Notes payable. The word payable indicates it's a liability. Prepaid insurance. Whenever you see the word prepaid, I have paid for it ahead of time, therefore it's an asset. Service revenue, as the name suggests, it's a revenue, it's an equity account. Dividends has a debit balance, if you recall again from the acronym DEAD. Common stock is an equity account, it has a credit balance. Salaries and wages expense is an expense, therefore it has a debit balance. Salaries and wages payable is a liability. The word payable suggests it's a liability, therefore it has a credit balance. Retained earnings, this is the beginning balance. Retained earnings is an equity account, the normal balance is credit. So once we identify whether it's a debit or a credit, we'll arrange all of them over here. And we have all the amounts listed out over here, respectively in the debit and credit side. Now what you remember is cash does not have an amount, or it's not given to us. So what do we know about a trial balance? Total debits must be equal to total credits. So here's what we will do. We will find the total debits and the total credits without the cash balance. the total debits and the total credits without the cash balance. So let me, for cash, let me just do one thing over here. Okay. So what I've done is I've done the total debits and the total credits. And what you will see is the difference. The difference that I have is 12,424. So that is the cash amount. So I'm going to put that 12,424 up over here. And once I put the cash amount over here, 12,424, you will see the difference is 0, which is what it should be. So this number is a plugged number. In this case, it's a plugged number, which means I just plug that number in to force the balance, to force these two to be equal. So if you ever have this in a problem, it's very easy. Total debits must be equal to total credits. That's the idea of the trial balance, to make sure that these numbers are the same. Okay. Now that I have my trial balance done, the next step is to prepare the income statement, statement of retained earnings, and balance sheet. The income statement is nothing but revenues minus expenses. That gives us net income. Statement of retained earnings, always a standard format. The standard format is beginning balance retained earnings plus the net income for the current period gives you a subtotal, subtract any dividends, and that gives you the retained earnings ending balance. That ending balance number goes into the balance sheet. They've asked us to prepare a classified balance sheet. A classified balance sheet is nothing but assets and liabilities. Assets, we group the assets based on certain criteria. So here in our example, we just have two groups, current assets and your long-term asset, and your liabilities is current liabilities and long-term liabilities. So let me show you again, just the format, how it is going to look like before I actually work through the problem. Okay. Once again, I have my trial balance. This is what I need. I no longer need the information that was given to me. I'm going to work with my trial balance. So I'm going to scroll over here. My income statement, again, all statements need to have a header. Name of the company is always on the first line. Name of the statement is on the second line. For the income statement and balance sheet, it's for the period ended. In this case, it's for the month ended July 31st, 2022. For the balance sheet, just like the trial balance, it's as of a particular date. So you'll just write July 31st, 2022. In the income statement, we have revenues minus expenses will give us net income. Statement of retained earnings, standard format. Retained earnings beginning balance plus net income will give us a subtotal. Minus dividends will give us retained earnings ending balance. In the balance sheet, it's assets, liabilities, and owner's equity. The assets I'm going to group into two categories, current assets and long-term assets, and liabilities, current liabilities, and long-term liabilities. So let's go to the list once again and identify the assets, liabilities, revenues, expense, and the owner's equity item. Accounts receivable is an asset. If it's less than 1 year or the current operating cycle, whichever is long, it's a current asset. So certainly receivables is a current asset. Accounts payable is a current liability. Cash is a current asset. Equipment, I don't intend to sell the equipment. I intend to keep it and use it. It's a long-term asset. Repairs and maintenance expense, insurance expense, they're both expenses that go in the income statement. Notes payable is a liability. Prepaid, and it's a long-term liability because they're saying it's due 2025. It's 3 years from now. If it was due in the next 1 year or the operating cycle, whichever is longer, it would be classified as a current liability. Prepaid insurance is an asset, and it's a current asset because I'm going to use it up typically within the next 1 year. Service revenue is a revenue item that goes in the income statement. Dividends will go in the statement of retained earnings. Common stock goes in the balance sheet. Wages expense goes in the income statement. Wages payable goes in the balance sheet. It's a liability. Retained earnings will go in the statement of retained earnings. So now that I've identified which accounts are going where, I'm just going to highlight it over here and show you where they are. So I had service revenue. There was only one item, service revenue. So my total revenues is $15,500. I had various expenses. I had repairs and maintenance, insurance, salaries and wages expense. I listed all of these in what's called the inside column, and the totals are put in the outside column. Total revenues, there's only one, minus total expenses gives me the net income. Retained earnings beginning balance, whatever was in the trial balance, that's July 1st, 2022. That's the beginning number. The net income that I earned over here, I'm going to bring that number down over here into the statement of retained earnings. I now have $10,414 available to give out as dividends. How much should I give out as dividends? Only $700. So after I distribute that $700, what I'm left with is $9,714. And that goes into the balance sheet, and we'll see that in a minute. Our assets, we go through the list of all the items we identify as assets, and we pull up our current assets. We have cash, that was a plugged number, accounts receivable, prepaid insurance. Now note over here, assets must always be listed in the order of liquidity, cash being the first one, and then how quickly they're going to turn into cash, or you're going to get the benefit out of them. Okay, so, and I had only one long-term asset, and that was equipment. So I'm going to put all the numbers in place over here and show you what that looks like. I have cash, receivables, and prepaid insurance, adding up to total current assets of $28,024. So I had current assets, 3 of them. Long-term assets, I had only one, so I'm putting that number in the outside column directly. Current assets plus current liabilities, current assets plus current long-term assets gives me the total assets. Now I go through the same process for your liabilities. I list them in the current liability and long-term liability grouping. So here what you will see is I had 2 current liabilities, accounts payable and salaries and wages payable. And then I have only 1 long-term liability. Again, once I put all my numbers in place, I have $9,920 for my total current liabilities. And I have only 1 long-term liability, notes payable, so I'm putting that in the outside column, giving me a total of $37,670. Stockholders' equity, at least at this stage, you will have only 2 items that are going to appear. Stockholders' equity, common stock, that's the investment made by owners in the business, and retained earnings. You don't have to write ending balance or the date because we know it's on July 31st, 2022. So we know what that amount is. We know what the, we know what the date, when we say it's, when we say retained earnings, we know it's ending balance. So I will write down those numbers over here. Now this gives me my total equity. Now these two numbers have to add up to total assets. Remember, total assets equals total liabilities plus owner's equity. Once again, if you made a mistake anywhere in the process, starting with the journal entry, it's going to flow through and come all the way over here. So our total assets are in fact equal to total liability plus owner's equity, so we are good. Once again, if you look at the relationship between the statements, net income number comes down over here. Retained earnings number that we had over here is the number that comes into the balance sheet. So you will see in the process over here that you have to complete your income statement before you can complete your statement of retained earnings. And you have to complete your statement of retained earnings before you can complete your balance sheet, because the numbers flow through from one statement to another. Once again, let's recap this acronym, DEAD, D-E-A-D. Debit all expenses, assets, and dividends. Okay, expenses, assets, and dividends are all normal debit balance. So as you go through the account names, if you can identify if it's an asset, liability, equity account within equity, is it common stock, retained earnings, dividends, expenses, revenues, you can identify, you can be confident of placing them in the appropriate debit or credit column. Also remember, whatever is the normal balance for an account. So if it's a normal debit, it means you increase it by debiting it and you're decreasing by crediting it. If the normal is credit, it means you increase with the credit and you decrease with the debit. So once again, what we have seen over here in this example is when we have the information from the trial balance, preparing the financial statement becomes very easy. So once again, just go through the exercises, read through your chapter, and learn and understand what these account names mean and why it is an asset, liability, or owner's equity account. If you have any questions, send me an email or ask me during class.